Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 22nd, 2025, and we're diving into the latest earnings report from ROST Stores. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. ROST Stores has just released their first quarter earnings report, and there's a lot to unpack, from their sales performance to their strategic outlook amidst ongoing economic uncertainties.
Revenue and profitability overview. Let's start with the top line. ROST Stores reported a net revenue of $5 billion for the first quarter of 2025. John, how does this compare to their performance last year?
While the revenue is slightly up from $4.86 billion last year, the net income saw a slight decline to $479 million from $488 million. The operating margin remained flat at 12.2%, which indicates stable cost management despite flat, comparable store sales.
What does this tell us about their operational efficiency?
It suggests that ROST Stores is maintaining its cost structure effectively, even with the challenges of flat sales. Their ability to keep the operating margin steady is a positive sign of operational efficiency.
EPS performance and analyst expectations. Now let's talk about earnings per share. ROST Stores reported an EPS of $1.47, slightly above the forecast of $1.43 from 9 analysts. John, what does this mean for investors?
This slight beat on EPS expectations is a positive indicator for investors. It shows that ROST Stores is managing to deliver slightly better profitability than anticipated, which can boost investor confidence, especially in a challenging retail environment.
Shareholder payouts and stock buyback. ROST Stores has been active in returning value to shareholders. Can you tell us more about their stock buyback program?
Absolutely. In the first quarter, ROST Stores repurchased 2.0 million shares for $263 million. They are on track to buy back a total of $1.5 billion in common stock during fiscal 2025, which is part of their two-year $2.1 billion authorization. This is a strong commitment to shareholder returns.
Future outlook and guidance. Looking ahead, what guidance has ROST Stores provided for the second quarter?
For Q2, they project EPS between 140 and 155 cents, with comparable store sales expected to be flat to up 3%. However, they have withdrawn their annual guidance due to macroeconomic uncertainties, particularly tariffs, which could impact profitability by 11 to 16 cents per share.
How should investors interpret this cautious outlook?
Investors should be aware of the external risks, such as tariffs and economic volatility. However, ROST Stores' conservative management approach and strong financial foundation should help them navigate these challenges effectively.
Key takeaways. In summary, ROST Stores has delivered a solid performance in Q1 2025, with a slight beat on EPS expectations and a robust share buyback program. Their cautious outlook for Q2 reflects the current economic uncertainties. Thank you, John, for your insights.
Thank you. It's been a pleasure discussing ROST Stores' performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on ROST Stores' performance in the comments below.